All right, there we go. So I want this to just be a bit of a discussion. I need to find out, as the new Roger, I need to find out what it is about budgeting and finance that you still have questions about. One of the things I did to prepare for this was to go back and watch the budgeting workshop that Roger gave in April. So show of hands, did you guys all see that as well? It was about an hour and he talked about all sorts of things. So I'm just kind of curious if we have the same baseline. You say for the most part? Okay. All right. So for those who haven't, I'm going to ask some questions about that, but that's okay. Because I want to get a better sense of what you really need additional information about and what you understand and you feel comfortable with. So I wanted to start with some of the terminology that we use when we talk about budgeting. For example, we use the word fund. It's the library fund, or it's the general fund, or it's the capital improvement fund, and how that can be a little bit confusing sometimes. So if you're a city library, often the city will have a library fund that they're levying, which just means it's a pot of money, and it's tax money that they're raising on your behalf, and it is an amount that is determined not by them but by your board. And then once you have that, once you have that money and you've deposited it into your account, then it becomes different kinds of funds. Then it's your general fund, and maybe you're going to take a portion of that and transfer it at the end of the year into a capital improvement fund. Or maybe you're one of these libraries that's lucky enough to have passed an employee benefits fund, which is its own little set of money that the city taxes on your behalf that you can only use on employee benefits like health insurance and taxes and things like that. I see, Bev, I know you have an employee benefit fund. Is there anybody else who's here who has an employee benefit fund? I'm guessing not. It's one of those things that medium to larger size libraries can pass.
Did you say I had an employee benefit fund?
It looked like it when I was looking at your city budget.
It's just pooled with everything else. It's not specific employee benefit fund.
Oh, really?
Mm-hmm.
Okay.
Yeah.
All right. So the other thing that I wanted to know, if you guys needed more information about, or how much do you care about the process that the city goes through with the state to create your budget. Do you know about municipal services? Do you know about that website and how you can go there and find copies of your city's budget? Okay, I'm going to do a screen share because I want to show you that, because I think it's really important, and not just because I'm nosy, but it's also because I'm nosy. Okay, so I'm going to do my screen share and we'll make that go away. I want to go back here, municipal services. Oh, there it is over here. So can you guys see my screen? Department of Administration. Okay. I'm going to say that is a yes. Okay, great. So municipal services is the department at the state that's responsible for budgets. They create workbooks that cities use, that district libraries use, that SEK will use as a special taxing district to fill out the information about what we need, and we can get to those workbooks. But that's not what I want to show you. Right over here, you can get to municipal budgets. Come on, go. There we go. And so you can go to your county and find your city's budget. So you'll notice for Allen County, I could get to the Southeast Kansas Library System budget, but I want to look at Iola. And I can just download it. All right, I'm going to make this full screen. This is a magnificent piece of Excel. These workbooks are really impressive. They have the instructions. They have fill in the blank. Anything that's green is information that we're having that people add to it. And it has let's see, I want to go, oh, there we go, debt service library. So it has different tabs that are for different parts of their budget. And it's kind of fun to see the city's budget. So this is the city of Iola. So is the library included in this budget? Yes, but where? So I'm kind of looking, it's like, oh, well, there's a library salaries reimbursement. And what do you know? That's exactly the amount of money we asked for in taxes. So this is how they determine just how they raise our taxes for us. And so we have our own, this is sort of our budget page, right? So I'm at adopted budget of the library. And I think in the past, Roger has talked about how we talk about ad valorem taxes. There's lots of different taxes that are used to support the library. And we are provided estimates for some of those motor vehicle taxes. And then it's just a little bit of algebra. We're going to figure out how much ad valorem tax we need after we've added up the estimates for those other taxes. And we've said how much our total need is. We need $220,000 to run the library. Then 220,000 minus 22,000 gives us what's left over. So that's the tax that's required. I find this to be kind of interesting. The other part of these workbooks that you might be interested in are the library grant page. So when we talk about state aid or state grant and aid, and we talk about there are 2 tests that we have to go through. So for Iola, we fail one of the tests, but we pass the other. The first test is, have we raised $1 more in tax revenue? Are we asking the taxpayers to support us with more dollars than they did the year before? And for us, for this year, the answer was no. We actually asked for $4,500 less than the year before. But the second test is has to do with, this is why we need to know mill levy math, which I can talk about later as well. Did the assessed valuation decrease or increase, meaning did then our mill levy go up? And in this case, yes, our mill levy went up a little bit because valuations went down, meaning we had to ask for a greater percentage of tax money because the values of the homes in our area went down. So anyway, probably more than you wanted to know, but I just find this fascinating, and I didn't know anything about any of that until I did, how do I unshare, stop share? Until I did a district budget. So for the Lynn County District Libraries, and I don't know that there's anybody here from there, you get your own fun adventure in budgeting. So far I'm doing all the talking. I want to hear questions. What about budgeting confuses you, or do you struggle with the most? And you can put it in chat if you want to. do you have any questions about the roles and responsibilities, the board's role, your role in helping develop the budget, in coming up with the potential cost of new initiatives, or coming up with estimates? Are you in the habit of, or do you have part of your process where you look at not just last year's actual expenditures and income, but maybe the 4 or 5 years before that, so that you can get an average and see if there's any trends? Due dates. So Cynthia asked about due dates. And that depends on your the relationship that you have with your city or with your funding organization. In some instances, I think the city, well, I've worked in libraries where I had to give a presentation. So I had to have a budget narrative, and I had to have what the library's budget was going to be, so I could go and sit around with the city council and ask for what it was that we needed and justify any increases that we were asking for. So in that case, that deadline was set by them. I'm writing myself a note to get the budget timeline, because that is something that was not included in the training that I just went through from Roger. Budget timeline. Okay. How many of you have very active treasurers and you work in partnership with them to develop the budget? So the board this year. Okay. I'm reading chat. So we have Sharon in St. Paul is the treasurer does it, but she's afraid it might come to her. So that would we can definitely help with that process. Jennifer, library has a cap set on the mill levy. Okay. Okay. I think it's important for the director to be involved in the process, because you know what the library needs. In many cases, you help open the bills, help get the bills paid. In many places, it's the director, not the treasurer, who's working on the financial report. So it's helpful to make sure that financial, well, let's just scroll back. Who has an active financial report that they give to their board every month that talks about, here's our budget, here's what we brought in for these different budget lines, here's what we spent for these different budget lines, and do a comparison? Good. Yay. Okay, that's super important. It was fun to listen to Roger's training, and he would tell these horror stories. Like the library, that it was a year and a half before they realized they weren't getting their tax funds, because it was a new director, a new city clerk, and a new board treasurer. Oh, Christine, you're lucky you have an accountant. Oh, that's good. Is that her? Okay. So part of the training that I'm working on references Roger's sample financial reports. And I think I created a really simple Google financial report for Sue as well. It doesn't have to be complicated, and you don't have to have lots of little budget lines. I was looking at Walnut, and they have like 4 sources of income and 5 expense lines, because that covers everything that they need. The new initiative getting quotes. The other thing that I can do, and I'll let you guys determine this, we can do a dry run of the presentation that Roger created, because then we can look at it and maybe that would be helpful, and it will bring up topics and areas that you want to have expanded on. This is really difficult. I kind of wish we were in person. So we will just do that.
Unmute. There I am. Hi, am I there?
Yes.
Dang it.
So in my mind, it makes sense to start with vocabulary. So in the beginning, we talked a little bit about fund accounting and how we can track these different pots of money that are coming to the library. And that the biggest pot of money, the library fund, which comes from the city or the county budget. Though I just learned today that some of our libraries don't have a dedicated library levy, and instead they're just a department of the city. So that's kind of interesting. Roger was very clear about reminding all of us that the library fund is dedicated library money, that the city may be tempted to hang on to that tax money, but it is raised for us. I had a situation when I was in Tonganoxie where the city really liked to sit on our money and not distribute it to us when they were supposed to. And like January 20th is the first distribution date. And they would sit on that, and it would come February and I'm running out of money. You know, I have a little bit of carryover. I have some, still have some cash in the checking account. But I had another payroll coming up. And so I had to go to the city and say, you know, what happened? Where is my money? And they said, oh, we forgot to cut that check. Well, they wanted the insurance or the interest on our money. So then the next year I made sure to, before that January city council meeting, talk to the city clerk and say, don't forget the library, don't forget our tax funds. You've received them, right? And you can send those on to us, because they really are just a pass through. Yeah, okay. So I'm glad to know I wasn't, it sounds like that is a problem that can happen. And I found that just showing up, sometimes I would like go over to City Hall and go, hi, I'm here from the library, just wanted to make sure we're going to get our money. I've got payroll. And sometimes that helped. And again, relationship building, it's all about relationship building. Does everybody know the name of their city clerk? That's probably the most powerful person in your city government. You know, you may think it's the mayor, but it's not, it's the city clerk. So make sure, give them cookies. make sure they feel very appreciated. Let's see, go on next. And it's very important to understand that the library board gets to set the budget within limitations, and that your city, if you're a city library, or can use the home rule charter ordinance process, which is complicated. It's not just a simple ordinance. They actually have to, you can have a petition drive against it. It's just a more complicated process. But they can do that to put a cap. And so then they can say, you can only receive the tax dollars that, I think in Tonganoxie, our cap was at 4.95 mils. And I have a whole section in here about mill levy math that hopefully is understandable. But the point being, unless, if there's no levy cap, if that has not been provided, you get to tell the city how much money you need for the library. Now, who has questions about Senate Bill 13? Because that complicates things a little bit. And did any, yeah, not so far. That municipal services page that I showed you earlier, they provide training for all of those city clerks and the municipal folks. And I attended that training, and a question came up about, the city wants to maintain what's called the revenue neutral rate, meaning the city doesn't want to raise taxes. But the library board has determined that, maybe they just moved into a brand new building and their utility bills are a little bit higher and they need to buy some new furniture, and, just their costs have gone up. So they are requesting additional funds. If the city still doesn't want to raise their tax level, they are still responsible for finding a way through surplus funds or shell game. They're still responsible for funding what the library board requested. And I thought that was really interesting. So the other part of budgeting is budgeting to a plan, not planning to a budget. This is one of those things Laura DeBon always told us when she would do her cooking the books training. And it just means, if you have aspirations, if there are big plans that you have for the library, then the budget needs to take those into consideration. And you need to have those in mind as you're developing your budget. So for example, in Huntington Valley, we had gone through the entire process of a strategic plan, and two big points came out. One was everybody wanted Sunday hours. Well, that meant more staff and higher electric bills. And so part of my job in developing that year's budget was to anticipate what those costs were going to be. The second part was teen services. So again, we wanted a part-time person to help with teens. So I had to figure out, well, what would be the impact on our budget for this person and for their wages and for their the tax burden. What kind of impact would this have on our budget? And then go and do the math, find the numbers and figure out, this is where Excel is your friend, figure out how much this dream is really going to cost. So then you have that. And if you show that you do need an increase in your budget, you have a story, a compelling story for why. And we did get an increase in our tax allocation that year because we had a strategic plan that we were budgeting to. So the other thing that is important for us as we're getting ready to look at our budget is knowing where our income is coming from, what our revenue streams are, knowing what our expenditures are. And that's where I think it's important to look at trends in those expenditures. What did we spend before the pandemic? What have we spent during the pandemic, and how has that changed? And then this comparison, looking at financial reports so you can see, here's what we budgeted for here's what things actually cost in 2020. And let's look at that side by side with what we had budgeted for 2021, and then look at where are we now? It's November, or we should have financial reports all the way through November. So one of the things that I would recommend that everybody be doing, if they haven't already, is estimate, kind of look and see what bills do we have that are going to come due in December, and estimate what the end of 2021 is going to look like compared to the budget. And I think we should do that for two reasons. One, if we do have a capital improvement fund, we need to determine how much money, maybe we underspent a couple lines and we have a little bit of extra money that we can put into our capital improvement fund. And also we need to know what our carryover is going to be, meaning how much money are we going to have in the bank at the first of the year. because that's money we can spend. As we're budgeting, I wish we could meet the state standards. Iola is so far from meeting the state standard for collection expenditure on our collection, but there are some of these guidelines that have been provided. Ideally, you would spend a minimum of 65% on your personnel costs and 12% on your collection. And I gave an example. If you had a $10,000 budget, that would be wages of $6,500 and a budget line for the collection. And that can be kind of broad. I'd have to look and see. In Pennsylvania, we were able to include the cost of our ILS, so COHA fees, anything electronic or print, so books, audiobooks, Hoopla, those kinds of expenses, things that were about the collection and helping. That's the foundational part of what we do. So you could kind of fudge that one a little bit. And then mill levy math. Sometimes this can be the most confusing part. If you're like me, math is not your friend. I'm more of a numbers person. And that's one of the things that helped me when I was a new director was I would do the budget and then I would write a budget narrative. I would take those numbers and put them into words, and that helped me understand. And it also helped if there were things that didn't make sense. Once I tried to write the story of the budget, it was like, oh, I missed something there. It was an exercise that helped my non-math brain understand all those numbers. But mill levies it's how we manage taxes. So you need to know how much money you need to run the library. So you need, or how much tax money, because we talked about there's other sources of revenue that you can look at as well. And then the assessed valuation, which changes. And I know, Karen, you and I were talking about that. In some of our counties, those assessed valuations are just going down and down and down, which means that the mill rate, that the tax rate that you have to raise goes up and up and up because it's a proportion. And it's a mill is $1 for $1,000 of assessed valuation, and the assessed valuation is that taxable value of your house. So we all get, if we own a house, we're getting taxed at 11.5%. So this was some of the fun thing Roger did where you can do the math. So you just have to take your cursor and go over 3. So, and here's what I was talking about, where this is a ratio. So the amount of money that you need to run the library divided by that huge assessed valuation number, which is usually in the millions, times 1,000 gives you your mill levy. So I tried to put this in an example that, now that I'm a homeowner, it makes sense to me. I want to know what my tax bill is going to be that supports the library. How much am I going to pay in a year to support the library? And that's what this math helps us determine. If I have a house that's worth $90,000 and I know I'm going to get taxed at 11.5%, that means that there's this $10,350 assessed valuation, and that 1 mil of that is $10.35. Oh yeah, okay. So I added this one. There is, let's say the library needs about $100,000. And in my county, the assessed valuation is 20 million. The math is I take what I need divided by the total assessed valuation for the county times 1,000 gives me that mill levy amount. So the mill levy is 4.81. And if I know that 1 mil for my house, my $90,000 house, is $10.35, and the library needs, the library has 4.810 mils, because that's how much money we needed, then there's going to be $49.78 in taxes. So that's how much it's going to cost me to support the library for my $90,000 house. I think I just confused myself. That's okay. The next part is, we talked a little bit earlier, just I was asking about roles and responsibilities. What does the director do versus what does the board do? I think it's important for the director to help develop the budget, to once the budget is approved, so you're helping develop next year's budget. And while you're doing that, you're still administering this year's budget, meaning you're purchasing, making sure the bills are getting paid, making sure that the money is getting deposited if your treasurer isn't doing that, and keeping track of where you are. So understanding those financial reports so that you can look at them and go, shouldn't we have had some more taxes? It's December. Usually in December, we're getting one final tax bill that is motor vehicle taxes. So has that come yet? And what the board gets to do is help develop that strategic plan so that you, as the administrator of the library, knows what the priorities are for spending money and what you need to put the money on. They are definitely involved in the development of the budget, and they have the final approval of it. So hopefully they can help you check your math. So we talked about the revenue. Mainly your revenue is property taxes. Though in looking at some of the budgets for our smaller libraries, for several of you, it's the SEK allocation. Our allocation is your primary source of revenue. And then you have some secondary sources. We talked about this. I showed you guys the example or the website where you can sort of look and double check that your sort of how you fit in to your municipality's budget. Other revenue sources include state aid, which we should know in advance, and your system grant, unless you're, some of the district libraries or county libraries. You might also have lost book fees. We do passports at Iola, so we have passport execution fees and fundraising. So this part can be a little bit tricky. And this is where I would say, look historically, look back and see what's your average for the last 5 years, and then conservatively put in an amount for fundraising. If 3 years ago you had some special fundraiser and you raised $1,000, and normally you only raise $400, put $400. Laura DeBon always told us to be very conservative with your revenues. So sort of budget low on revenues and be a little bit more liberal with your expenses. That way, if you underspend and over, what's the word? If you bring in more than you expected, you're going to end up in the black instead of in the red. Same with memorials, donations, bequests. This can be a confusing part, and I'll admit that Iola is a little bit more of a extreme example. You have your operating budget, and your operating budget doesn't legally have to show every source of income and every source and every expense that you have. If you have a bequest, or if you have a memorial gift, we had somebody who passed away, they didn't have any kids, they gave us $5,000. That can go into a special fund. It can go into a different bank account completely, and that's not part of the budget. It's considered off budget. And that means that it doesn't show up as an expense on the regular budget. The operating budget is more for your day-to-day, what you absolutely need to run the library. And that should include some programming, all of your collection, personnel, of course, utilities, supplies, travel and continuing education, things like that. And then that frees you up with grants or with bequests to do other more interesting things. And you can also, any of those non-tax monies that you bring in that are left over at the end of the year can go right into a capital improvement fund. So for a lot of you for this year, you got that ARPA grant. That's all off budget. So you don't have to, that nowhere on your budget does that show as income. And nowhere does it, the expenses that you have associated with that grant. So the check that you had to write for the giant shelter that's next to your library it's not actually in your budget. It's off budget. And that can sometimes be a little bit confusing. Some of the grants that we would recommend that you do put into the budget, and I saw that Savenberg does this. If you know that you're going to apply for a competitive grant for SEK, so like you and you anticipate that you're gonna get it, then you can be aspirational and put that in there. If you anticipate that you're going to apply for a continuing education grant, you can put that in as a revenue source. The budget is also a way to just keep track. I'm a big believer that if I've overspent a budget line, I let that show in the financial report, as long as I also show that I underspent a different budget line, at least so it balances. It's what matters most is the number at the bottom. You just want to make sure that you stay in the black. The other thing that can be a revenue source, if you're lucky enough to have a foundation or to have interest that's building on an endowment or a bequest, you can budget to take a portion of that. Like if you have a big endowment fund, you can say, we're going to take 4% of the value of that endowment fund and transfer that into the operating fund as a revenue source. And you can do that. So here is the budget cycle. It's not quite a budget timeline. I think I want to find a true budget timeline for this. Oh, I got a chat. Yes, pause for questions. Oh, okay. We are, do you have questions? And I can stop the sharing.
I have a question.
Yes.
So if the only way to end up in the black is to include off budget items or items that could be off budget, we need to go ahead and put them in so that we end up in the black.
You could, yes. The other thing that you need to take into consideration is that carryover. So are you starting the year? Do you have, like, because of COVID for Iola, we have a carryover of $45,000. And that is sort of, when I'm creating my budget, I look at, here's the income that I'm scheduling or I'm anticipating for this year. And I add that to the carryover, so that January 1st cash amount that I have in the bank. And that gives me resources available. And that is another thing to look at, because that can usually, that's the cushion that you need that'll get you through the first 2 months of the year, and especially get you through the first 3 weeks of the year when you've spent a majority of your money from your tax money from the previous year and you haven't got your first check yet. So that's another element to look at that, again, I honestly confused me to no end until I got to Pennsylvania.
So the carryover that we have, we won't, okay, let's see. Going back to real quickly a little bit, and I've been here since March 1st, 2016. We have never had more than, we've always had the same mill levy, 0, 0, two, I think it is, yeah, two. And yet we do have a carryover every year. This, when our treasurer had a bit of a hissy fit and quit in April, then it was all dumped on me. And so a couple of months ago, we hired H&R Block to get us out of tax trouble, and it's a big long story. But anyway, now H&R Block is doing our payroll each month, and it was very eye-opening because now I'm doing the entire budget. The carryover, if we put it in there though, it will not match the amount spent, so we won't have a budget that, you know, revenue does not match expenditure. And is that okay?
Well, that's where you would show, I'll get an example for you, where your revenues and your expenditures should ideally be balanced, but the total resources can be more.
I guess I don't know how to show that when I'm creating the actual physical budget for the board to see in a couple weeks.
Okay, I have examples and samples that I can share. This is Cindy, right?
Yes, I'm sorry. I'm now on my mobile phone so I can talk.
That's okay.
I type so slowly, but I'm watching on my work computer.
No, that's okay. So I will, and I'm putting together a Google Drive that has sample budget for a small library, sample budget for a large library, and it covers that, where your income, total revenue or total resources available, and expenditures, and then an anticipation of carryover, and how that it's sort of the two elements that work together, your cash flow, which is how much money you actually have in the bank, and how that compares with your budget. And that can get you into trouble if you're not paying attention to both of those things. And sometimes libraries will only pay attention to the cash flow. So all they're doing is looking what's in the bank account. And I think Roger made a really good point. That fluctuates because we're not getting so say we're going to get $5,000 in tax money. It doesn't come evenly divided by 12. We get a big chunk early in the year, and then we get little dribs and drabs later in the year. So if we just look at what the money that we have in the bank account, we can make some poor decisions and overspend. And then we hit November and we don't have enough money to pay payroll. So we have to be very careful and look at both of those.
And I know we need to, real quick.
Yeah.
So there's no limit on the amount we can put in capital improvement funds, or is
of
there...
non-tax, only non-tax money.
Oh.
You can put 10% of tax money into your capital improvement fund, and you can and I think Roger doesn't, we'll need to look at this, but I think that allocation is not, he doesn't like allocation or state aid to go in there either. But if you know, somebody in your community passes away and they name the library in the bequest, all of that can go into capital improvement if you want it to.
Okay, gotcha. Thank you.
Okay. So with the budget cycle, we're in that November, December. So determining, looking to see if situations have changed since the budget was it's the end of 2021. First thing I would do is make sure that I have those year-end expenditures, those estimates, so I know, or I have a better idea of what my true carryover is going to be at the beginning of the year. I can make a determination about capital improvement fund, but I can also look at next year's budget and just double check and make sure that it still makes sense. Roger had a process of you had the proposed budget, but then you had what he called the working budget. And that's up to you guys if you want to do that. But just understand, you know, you already have passed next year's budget, so make sure that you understand it and you are prepared to administer it, because that's what we get to do. We get to make sure that we don't overspend, or and as we, if we've put in a dollar amount for fundraising, then what's our plans to make sure that we get that fundraising goal met? So that's what I'd be doing in December. And then in January, again, review your strategic plan, look and see. Sometimes if you have a strategic plan, it's a 3-year plan. So what year in that plan are you? Does that make sense? What year are you at? So if it's a 3-year plan and you're on that 2nd year, review it and go, oh yeah, we're going to have a new program series this year. So I got to remember that I put money in the budget for that. So let me just make note of that. And pay attention to what kind of income you're going to need. Then I just confused myself. We're thinking about, at the beginning of 2022, we're already thinking about 2023. So by January, February, March, we need to be thinking about the next year and thinking about any big new initiatives that we want to do. So if look at the plan and see what's coming up. And also, this is when you would start, if you need to get quotes or estimates, or you need to fiddle around with the math to determine what's it going to cost. We want to do this cool new thing, but what is it going to cost? And is it something we can get a grant for? The first part of the year is when you can do that, and we can help you with that, of course. May, June, during the summer, is when you should have a draft budget. Usually that budget, the way I do budgeting is I will have this year's budget. I will have a column that has this year's budget. I'll have a column that has what we've actually spent for the first quarter of that year. So I'll have January, February, and March, maybe even January, February, March, April, and May. You know, it'd be nice if I could have 6 months worth of actual financial data, because then you can extrapolate it. If you only have 3 months worth, multiply it by 4. And you can get a quasi accurate idea of how much you might have for the year. So that there's a little bit of an art to estimating and figuring out what those estimates are. But that's important because you want to make sure that you're looking at your next year's budget in the context of last year, the year before, and the current year that you're in the middle of. So that's kind of what you're doing in May and June. And then for most city libraries, you're done. You know, by then you've presented it to you've given it to your city, you've done whatever presentations you have to do. You and your board have gone to the budget hearing or the budget meeting, if you have one, and stood up and said what you're doing and what you accomplished and why you are asking for why you are raising the funds and have developed the budget that you developed. And then the city puts all of that information into the gigantic, wonderful, beautiful workbook that I showed you a little bit ago, and goes through the process of conducting a hearing. And if there's any kind of a revenue neutral rate hearing that has to happen, that adjusts the timing of this. If you are a district or a county, you probably we might have a slightly different time schedule. I don't think I have any districts. For people that are district libraries, they're sort of like a school district in that they don't have the city to rely on, and they don't have to go to the city to ask to have taxes raised. They get to go directly to the taxpayers, and they send their budget to the county clerk, and the county clerk raises taxes on their behalf. So in August, you know, in the fall is when we're having hearings and everything is getting finalized. And then we're back to November, December, where we're preparing, wrapping up this year and getting ready to do the next year. there we go. And we kind of talked about this already. When you're thinking about your budget, this is, what do you want to accomplish? How much money are we going to need to do it? Preparing the draft budget, we can help you with that. There are lots of different methods and spreadsheets and you can do it with pencil and paper if you want to, but there's ways of going through that process to prepare that draft budget. And then you need to go and talk to your board about it, or you need to be preparing that draft budget with your board so everybody has, you're all on the same page. And then that negotiation process makes it easier, and I hope will nip in the bud some of the conflict that happens when and micromanagement, that if you and the board have worked together and you both have determined what your spending goals are, then they can delegate to you as the director, as the administrator of that budget, to go ahead and order what you need, knowing that you're following the budget, that you know what your limitations are. So hopefully that's why it's a good idea to do this together with your board. And then the board approves it, and it is the board who has the authority to levy taxes for the library that submits the budget to your municipality. Notice of budget hearing. Out of context, this can be confusing, but just know that this is what gets put in the paper. This is what people who are in the community get to see and can come and talk about your budget. What if you have more money than normal in carryover? Coffeyville, we're in the same situation. So because of COVID, we have additional carryover. One thing you can do is ask for less taxes. You can take part of that carryover and show it in your budget and reduce the amount of taxes that you need to raise because of that. Roger did that with SEK for next year's budget, and we didn't have to have a revenue neutral rate hearing because we didn't ask for more tax money than we had the year before, because we had enough carryover to make it so that we could go to the taxpayers and give them a break, which sometimes can get you in trouble. That's why you need to pay attention to the that grants in state aid, the state aid workbook. We just have to be careful with it. An example of a time when you need to make a big adjustment to your budget would be, say you paid off a building. I know some of you have recently done that, where you had a lease purchase agreement for a building and you made the final payment on it. Well, when I was at Linwood, that meant we had $33,000 a year less in expenses. So we reduced the amount of money that we needed to raise in taxes. And I had to write a letter to the state and explain, well, no, it's not that there's less local support or local financial effort on behalf of the library. We don't have this debt payment anymore. And so we got our waiver. Continue to, you can put 10% of tax money. How much of your carryover is non-tax money? And in theory, you could be transferring more of that into capital improvement. You can also consider expenditures that maybe weren't in the budget. If you have a larger than normal carryover, is this the year to add more to Hoopla? Is this the year to replace your book carts? Is this the year to purchase some things that you needed to purchase that are one time and they're not, it's not a subscription that you're going to then regret that you put some money towards because you've run out of your extra funds. So those are some things to consider as well. Okay. Notice of the tax hearing. This is the fund page. And basically this is the for this city, here's the taxes. Here's, so not ad valorem tax is about $9,000. The library board has said they need $49,000 to run the library. And so the amount of ad valorem tax that needs to be raised is the difference between 59,000 and 9,000. So about $49,000 if I'm kind of doing the math right. I added this. This is where we talked about the grants and aid to public libraries and determining. So the example I was giving about Linwood, where we paid off the building, our proposed year was $30,000 less than the current year, so we didn't qualify there. And our levy rate went down. We didn't need the same amount of tax dollars, so our levy rate went down, and that was a not qualified, and we didn't qualify, and I had to go through the pain and suffering of writing a letter to the state. It was really not painful at all. This part of the training I think is really important. It's knowing sort of the ecosystem of tax money. I mean, and this is important for any of us, just as citizens. I think it's important to know that when we pay our taxes, it goes to the county treasurer, and then from the county treasurer, who does it go to? You know, the county treasurer collects this big chunk of money, and part of it goes to the school district. So who are you in competition for taxes? You know, this is another, when you're developing your budget, are you aware of what's going on in your community? Is there going to be a big new school bond issue? Well, then this might not be the year for you to ask for a little bit more money for the library. Does the city have some big expenditure that is going to compete, or that you'll be in competition for? But anyway, the county collects the taxes and will distribute it to the people in the county who have asked to have money. And then the county treasurer will take the city's portion and give it to the city clerk. And the city clerk will get this money and go, okay, so in our budget, we have $45,000, 30 mils that's going to the city to run the city. We have raised, we being the city has raised 5 mils or $7,500 for the library. So that's our portion. And then, you know, whatever else that they needed money for. And then this is the important part, getting your money from the city. You need to get your money from your city clerk. And then keeping track of it, that this is tax money, and tax money does have certain things that you can and can't do with it. As I mentioned, I think before, you get that tax funds at different times. January 20th, March 20th, June 6th, September 20th, the end of October, and then you might get a December 20th motor vehicle only. One of the things that I want to talk about also is the delinquency rate. And sometimes this can be good, you know, work out in your favor. Other times it can be, you've asked for $5,000 in taxes. You're getting to the end of the year, and where's all your money? Why are we missing? How come we don't have as much tax funds as we were hoping for? You call your either the county or the city and say, what's our delinquency rate? And maybe they'll say, oh yeah, we've got a 80% delinquency rate. So, you know, that's 2 out of 10 people aren't paying their taxes. And that might impact you, that if people are late in paying your taxes, the county can't push through that whole cycle money that they weren't able to collect. Senate Bill 13 changed a few things. The revenue neutral rate is the new part. This is a truth in taxation is the name of this law, and it was had bipartisan support, and it was meant to make it very, very transparent when any entity, including school districts, are going to raise your taxes. So we now, cities and district libraries and rural water districts and things like that, now if we're going to exceed the revenue neutral rate, if we're going to ask for more money than we did the year before, we have to notify the county clerk by July 20th. So we kind of need to know what our budget is by July 20th. And then the county clerk has to notify all the taxpayers, and then the taxpayer, you have to have a revenue neutral rate hearing, which means that the public can come, and not you as a city library, your city would do this. The public can come and say, why are you raising my taxes? And then in a open meeting with the public possibly there, they have to vote yes or no to approving the budget and exceeding that revenue neutral rate. In reality, very few people come to those meetings, but that's okay. Also, there's a slight change to the budget schedule if you do exceed the revenue neutral rate, and that just means that the hearings are later in the summer, so August 20th to September 20th, which if you're a city library, that's not quite as important. But if you're a district library, that really changes how you're going to plan your year. Will a city that wishes to maintain a revenue neutral budget be able to override the requirements of KSA 12-1220? The municipal services, the head of municipal services said last year that no, the city cannot override the requirements. That KSA 12-1220 is the law that gives your board the authority to raise the taxes, or to raise the money, the dollar amount that you need. And if the city wants to maintain a revenue neutral rate and they don't want to raise that amount of tax for you, they have to shuffle things so that the library board still receives the amount of money that they've asked for. Now, politically, and depending on the culture of your community, you might not want to have that argument with them, and you might want to negotiate and keep a very cordial and positive working relationship with your city and sort of negotiate that. But legally, from what Stacy, who was the head of municipal services, according to what she said in her budget workshop, the city still has to provide the library with the amount of money, the amount of dollars that they asked for. We're getting there, getting to the end. I saw this in several of my small library budgets. I was really happy. You guys have a line in there for the budget, for the bond. You have your $100 to $250 to bond your treasurer. So good for you. And municipality pays funds to the board treasurer. So the board treasurer is technically the person that is going to receive the tax funds. But usually that check just either is automatically deposited or it shows up to you and you put it in the bank. Cash basis law is that you can't spend money that you don't have, which is probably really good practice. And public libraries can have a capital improvement fund, and we can talk more about the process of getting that. It's listed in the law that we can have a capital improvement fund. And as I've said before, 10% of your tax funds can go into that capital improvement fund. And you can anticipate that. You can put a expense in your expenditures, a line that says capital improvement fund contribution, and anticipate what 10% would be. And then you're raising those tax funds, you're raising tax dollars to put into your capital improvement fund. And you can do that. And then, whatever is not tax money could go in there as well. Investments, some libraries are all over this, and others of us are like, we have a savings account. You can, for tax funds, you have to you have to be secure. There are no risky investments with tax funds. So you can use savings accounts, or you can use a CD to try to make a little bit of money on your money. And you should do a local branch. That can be a problem in some of our smaller, less populated counties. If you can't get an interest rate that's high enough, you do have these other options: treasury bills, a municipal investment pool, and municipal bonds from the state. I do not know as much about those last three as I should, so that's on my to-do list to learn more about that. But if you have questions about investment, contact us and we can help with that. So this law 12-1225 lets anything that we get as gift to be invested. So we have an account with Vanguard for some of our investments. We have another account with Edward Jones for additional investments. We had gifts in Pennsylvania that they did really well in all of this, depending on how the market is doing. But you do have opportunities to make money on your money by law. You can't do that. No risky investing with tax money. And you also, if you've gotten a bequest before, you might know this, that sometimes the people that are giving you the money have very strict guidelines, and they'll tell you you can spend a portion of this gift in the beginning, but then you need to invest the rest, and you can only ever touch the interest. You can never touch the principal. I'm going to pause. Any questions before we get to financial reports?
So a capital improvement fund.
Yes.
So we had one set up when our bills used to be all in with the city, and they kept our checks, but we've separated. And so they gave us what was left in the capital improvement fund. We had a money market account fund that was already established, and so we put that in there. Is that our capital improvement fund now, or does it need to be something special, or what's the situation with that? Is it just another savings account?
Well, the capital improvement fund has restrictions on what you can spend it on. So it's meant for capital projects, but you can also use it to buy big equipment. So for example, an emergency equipment purchase versus your hot water heater is 30 years old and you just need to get a new one. If it's just a 30-year-old water heater, the expectation is that you would put that in your operating budget, that you would anticipate that expense. But if it's an emergency, you can use your capital improvement fund for that big expense. And then you don't have to, there's no hit to your budget in that case. I need to look more about, because capital improvement funds have some, and those, Bev and some of the others, you guys might be able to answer this for me. I think you can invest your capital improvement fund. I know it includes tax money, but I think once you've put it into the capital improvement fund, that sort of changes its nature. But I'm gonna write myself a note, Karen, and double check with that.
Okay, sounds good.
Did you read something about moving some money out of capital improvement fund and how much you can move back out of it? I wasn't clear about that.
That is true. That if say you had a horrible delinquency rate and everybody in your community quit paying their taxes, and you realized you were going to have a budget shortfall, if you anticipate, let me think, if you anticipated that, I think that you can put into your revenues a transfer from capital improvement fund. So say, for example, we talked about the water heater. I want to research this, but take this with a grain of salt, but I think this is what it is. You can have a revenue line that says transfer from capital improvement. And so you can say, we're going to write a check from our capital improvement account to our general fund account for this amount of money. And we're going to use that money to buy this, these new computers that we need, or once that money is in your general fund, you can use it however you want. Okay. So I'm going to find out more information about capital improvement funds and follow up with that. Investment. Good, thank you. I know there's a lot I don't know, so thank you guys for helping me sort of find the parts that need to be beefed up. Any other questions before we get to financial reports? We're very near the end. Okay. Oh. Yeah. So I'll find more examples of some best practices for having transfers in from other accounts and transfers out into different accounts. That's sort of that fund accounting portion of the budget, that if you have an endowment fund, that's a different pot of money. And if you want some of that money to show up in your operating, you need to have a line that says transfer in from endowment $1,000. Your endowment might be $10,000. Actually, you should make that $1 million. Let's aim high. But you can put into your general operating budget that you're going to use a portion of that special fund this year in your budget. And that way it's transparent. Okay, financial reports. Whoops. Financial reports they really are essential. They give you and your board the ability to look not just at the checking account and the savings account and the capital improvement account, but how what your goals are for revenues and what your hopes are for expenditures, and compare the actual dollar amounts that come in and the actual dollar amounts that are going out, and gives you, it's just like a home budget. A budget's a budget. It's a way for you to keep track of your spending, to make sure that you're not going off the rails in one area, or if you are going off the rails in one area, which I'm doing with the SEK budget, that you are underspending in a different budget line to offset that. Absolutely. I'm all for meeting. This is the CE portion, since you guys get to count all of this towards CE, because we're basically redoing the training, or going through the training that was from April. And I'm all for work sessions. And if that's going to help you guys to, we have a work session about setting up your financial report for January, that then you can use January, February, March, and we can have a work session for gathering all of those revenues and looking at your expenses. Okay, cool. Yeah. Zoom makes this so easy, so we might as well take advantage of it. Yeah, okay, good. There, we have consensus. Yeah, and we'll probably start with financial reports in January, because then it just gets you off to a good start. This is an example of IOLAs, just so you can see how it can be complicated or uncomplicated. But so we do have the endowment fund as a line item, and that's just that portion of the endowment fund, the interest off the endowment fund, how much we're going to bring in to help support what we need for the year. And you'll see that we're not going to end up with a balanced budget. We have revenues budgeted of 302, but expenses of 306. But the part that you're not seeing that's at the top of this sheet that goes to the board is here's how much money we have in the checking account. And that's where we have lots of carryover. But this is a much more complicated budget than I think a lot of you guys need. And I think later there's a couple other slides and the Google documents that I mentioned earlier that are a more simple version. Yeah, let me tell you another. I'm going to rat on Tonganoxie. When I started Tonganoxie, I followed a library director who had used the credit card as her personal credit card and had embezzled $20,000. That the board got in trouble for that with the city because the board was not doing their job in looking over and providing financial oversight. A financial report could have, if a financial report had been done correctly, might have shown, well, what she was a little sneaky in how she did it because she used a credit card. But a good financial report and also having your treasurers look at the bank statements and definitely look at your Visa statements is good oversight, good checks and balances. Always need to think about checks and balances. And the expenditure report, your financial report, how much money did you deposit? You know how we get state aid through an electronic fund transfer sometimes? That is something that as you're creating your financial reports, you need to be looking at the bank statements too, in case you received a gift that way or received income that way. So the financial report will show all the income that you received. It'll show not just a list of bills. I mean, a list of bills is good and the board should look at that and approve the list of bills, but you have 4 bills for 4 different businesses that you buy books from. You went to Cheryl's talk and you have books for schools and you have Brodart and you have Ingram and you have those 3 bills. Well, those all need to be combined. All those expenses need to be combined and shown on the budget on your collections line or books line or whatever you want to call it, your materials line. So then you can see combined how much you're spending on your collection compared to what the budget was. And the other part of that is, so here's how much we've brought in and spent this month compared to here's how much we've brought in and spent so far this year compared to the budget. Yeah. You need to check your math when you're doing these reports. We can help you. You can, using either Google spreadsheets or Excel, you can create high quality reports. Vivian uses Excel to do all of Viola's bookkeeping. But if you're lucky enough to have an accountant or you are lucky enough to have QuickBooks, that software will help you with this as well. And you can get QuickBooks with your TechSoup account. You want to make sure that the information on the report is accurate, that it's as up to date as it can be, and that it makes sense for both you and your board. So here's one of the samples that Roger created that's super simple. You have this month, the Anytown Public Library brought in $71 in fines. We didn't receive any state aid because you only get state aid once. We didn't receive anything in our system grant because it looks like we already got it, but we did get $10,000 in tax income. So for this month, we brought in $10,000. So far this year, we've brought in almost 30 and the budget's 37. So we are at 80%. We've received almost 80% of what we're expecting. This is one version of a budget where it shows you the percentage. That works out really well if you are, say you're at the 3rd month of the year. So are you at 25%? Say you're in June, are you at 50%? Or you're at the end of September, are you at 75%? So you can use those percentages to help you keep track of where you are. The expenditures also super simple. How much of all the bills that we paid, how many of those were for books? How much went towards the building? How much went towards salaries and employee benefits, insurance, miscellaneous, supplies? This doesn't have to be complicated. The other option you can do for your financial report is the dollar amount remaining. And that just depends on you, which makes more sense to you, a percentage or how many dollars are unspent in these different budget lines, and given where you are and how many more months you have to get through. Chat. Oh, okay. So Kathy at Savenberg they use Quicken. Good for you. Yeah, we're one of our goals at Iola is to switch to QuickBooks. So we're kind of excited about that. It helps. That software is meant for this, and it has a lot of these reports built in. Yeah, so this is just almost an exact example of a different way of doing your financial report. And there's nothing to say you can't do the number of dollars remaining and what percentage of the budget that is. Combine the two, make it all in one. For most of our libraries, if your budget is less than $275,000, you are not required to do an audit. If you want us to look at your books, we can do that. I think it would be a really good idea. Again, I might be a little bit more sensitive to financial oversight or having a third party look at your finances because of my experiences at Tonganoxie. We had an auditor come in and he gave us some really good suggestions for how to have good checks and balances. So the person who is opening the mail and looking at the bills maybe is not the same person who is writing the checks to pay those bills, just in case there's a bill that gets put in the trash, or there's a bill that comes in for a book and it does never get paid. So there's things that we can talk about to make sure that everybody's protected, and also everybody is it's transparent. We're the stewards of public funds. All we're talking about is tax money. So we really don't want to be put in a situation where there's any even suggestion of impropriety. That's part of those library ethics. You know, we have to be good stewards of the public funds. So if we have a large budget, we have to get an audit. If we have a medium-sized budget, we can work with a CPA or somebody to come and look at the books and just do an overview of them, which I think is a good idea. It came up just recently. If you're switching, maybe you have a new director, that might be a good time to have somebody look at the books. Okay. We can look at those other, it's sort of best practices for this checks and balances, just to, and it's also a second set of eyes. You know, I'm not good at math, so I kind of appreciated it. In Huntington Valley, my treasurer math brain, hardcore math brain. And so she and I had another person on my board who was a CPA. They could just look at it and go, these numbers don't add up. And I go, oh, they don't? Let me go look in my Excel formula and, oh, I missed a cell, because I have to have the computer do my math because I can't do it in my head. So it's good to have multiple people involved in this process. Protects you and protects the library. And we talked about this. If it's small, you don't have to. We do have to do it independently, but you might be able to, find out who the city uses and see if you can piggyback on. Roger started with the top 10 mistakes, and I thought we could end with them just so it's a reminder of why this is important. And again, why you're spending an hour of your Friday before Christmas talking about this or learning about it, because it's really important. And we can go through these quickly because for those of you who have been a part, you saw this in April, it's the same thing. You need to know what the process is. You need to know when your clerk needs your budget, what form they want it in. Are they expecting you to present? Do they want you to have a budget narrative? What are the expectations? How does the library fit into the ecosystem of your city government? Or if you are a county, how do you fit into that process, etc. Not understanding the math. So hopefully you have lots of examples, and again, all of this will be put online, of how to calculate your how much that mill raises. You can do that math. And you do need to understand where your money's coming from. What are your sources of revenue? Like we just talked about, can your capital improvement fund at times be a source of revenue? Yes. So we'll find out more information about that. Boards, this can be a problem where the board has approved the budget, but then they're not as supportive in allowing the director to spend that budget. So that's one of the things that needs to be talked about during the budget process is salaries and any potential bonuses and any potential raises, because then that's very clear and upfront, and it's something that's been talked about and decided on before the budget is approved. I would say it's a mistake to not have financial reports, but then it's also a mistake if it should be part of the agenda. And one of the things that you as the director can do is highlight portions of the financial report. If you got, was it in February is when we usually get state aid. So your February financial report should have that you received state aid. Draw your board's attention to that fact and have them look at and maybe highlight some of the things that are going on in the financial report, and that makes it more meaningful for them and you too. Again, the financial reports are really important, and they need to be accurate. And that can be complicated, but doesn't have to be. We can keep things simple, and we can work with you to get those set up. Yes, your budget is you've pre-planned for it. Your budget also, it may keep you from being spontaneous, but that's okay, because you need to understand what your limitations are and what your budgetary constraints are, what your budgetary limits are. For some district libraries, we actually have a spending cap. There's we have to be careful, and we can't spend more than what we're allowed. We have a spending authority. So again, just understanding that what your overall budget is, and if you make a major change, if you decide to increase everybody's salaries halfway through the year, and you hadn't budgeted for that, and you don't have enough carryover to make that happen, that can put you in a very difficult place. We all need to know if there's a charter ordinance creating a limit on us, like in Tonganoxie, that 5.95 mil cap. As new directors, we need to figure that out. We need to know that. We need to find out. I think here in Iola, we were in a weird situation where the city created a charter ordinance that said they can use a simple ordinance to cap us. So I have to know that. I have to understand what that could mean for the budget. This one's really important. I know I said earlier we have to play nice with our city, but at the same time, you don't want to defer your budget decisions to the city, because it's not their responsibility, it's the board's responsibility. And for district libraries, it's most especially the board's responsibility to determine how much tax money needs to be raised. So I read something today, and this really surprised me, that we might not be required to create a budget, but if you want your allocation from SEK, you have to have a budget. And for this, I mean, the whole point of this entire discussion was the importance of the budget, and I, for me, it's because we are the stewards of tax funds. We're responsible for other people's hard-earned money. All right, what other questions do we have? I'm going to stop the share.
I have a question.
Yeah.
Allen County worked with, the libraries in Allen County worked with Thrive to get this grant recently, which was approved. Now, we won't be touching any of the money. So we're just, my understanding after talking to Logan, I think his name is that it will, what we want to purchase will go to them. And so will any of that need to be on any budget anywhere?
No, and it's a grant. Grants are off budget. So all of the ARPA grants that everybody got this year, or not everybody, that a lot of people got this year, are off budget. In Iola, to the point of we have a special bank account that the grant money went into, and it's not the general fund bank account, it's the special fund bank account. And that way we're keeping track of it, because you don't want to have, you know, all these bank accounts that you're not keeping track of. But it's not part of the budget. It's not part of the operating budget. It's a special fund, and it's treated differently.
Sharon, I have a
Same
question.
Yes,
Oh, I'm sorry. Should I go ahead?
yes.
Okay. In all the time that I've been here, there was one time when Kim Redder had to actually tell my board, no, they could not set an amount of $15,000 that they have to keep in the bank because it is taxpayer money and we need to spend it. Well, they, so over the years, there has been this carryover, and some of it, I think, should have been put into capital improvement after what I've learned today and in reading recently. But what amount of that carryover can be put in there now, which would be, you know, well after the fact, because it's been happening for a few years now.
We'd have to,
Because there's no-
yeah, we'd have to look at it. In theory, any carryover that you have is non-tax money. So, you know, in theory, you've spent all of your tax money by November. That's not true, because we get some money in, but that's the money that we get in December is not ad valorem tax. It's motor vehicle. But yeah, so we do need to keep track of that. I'm going to think about that some more, Cynthia, and talk to some of my other cohorts and get a better answer for you about, because I think
there is a way to get proof of it, even though it may be considered anecdotal records. You know what I mean? Over the years. Okay.
Well, and you know, is it too late now anyways? You know, what do we want to do going forward?
Okay.
Let's see, if grants do not go in the budget, what about materials delivery grants, collection of, see, I think SEK grants can go in the budget, because those are grant, maybe not the competitive run, because that one you might not get, but some of these where, like the materials replacement grant, they're not really grants. It's more of it's like the allocation, where put it in as a revenue if you're pretty sure you're going to get it. If there is If you don't think you're going to get it or you don't know, don't put it in there. So,
Hey Sharon, this is Bev from Pittsburgh. I have a question
yes.
about the SB 13 and the revenue neutral rate.
Okay.
So what if you're a library and you're going to stay in that revenue neutral rate? And how does that going to affect your local support from and state aid and all of that, where you either have to raise your budget $1 more or have a higher valuation?
You have to hope that your valuation goes up.
But even
and
if your valuation goes up, if you're staying at the same dollar amount, it's going to be the same dollar amount.
But the second test has to do with the mill rate. So if, oh, where's that? I had it. Let me look on my document real quick. Where'd it go? There, it's. And yes, there is a risk of losing state aid, because if both the dollar amount goes down and the amount being levied, the mill rate levy goes down, that is demonstrating a decrease in your local financial effort. And
will
that
the
is,
state take that in consideration, the state library, because of this law?
I don't know that that's been tested yet.
Okay.
And that is something that we need to be aware of. I mean, the whole point of that law is to try to keep taxes down, but at the
Right.
same time,
It's a punishment in some ways.
well, health insurance is not going down.
No. And do you ever want to give your employees a raise?
Yeah.
I mean, the city has other sources of income, you know, rather we just have ad valorem.
Right.
And sales tax is not included in this law. So the city can use that for their employee raises.
Right.
So it seems like it's unjustly affecting libraries.
Yeah, it could be that it needs to, we think it's a brand new law, and the system directors, we talk about it, that there's probably going to be some changes and adjustments to it. For district libraries and, like for SEK, if the cost of notifying every taxpayer about the revenue neutral rate hearing, if that cost is put on us, for, let's see, Gail said for the Central Kansas Library System, that would increase their budget by $20,000 just to
Right.
mail out postcards.
Right.
So there's some unintended consequences of this law that need to be tested, vetted, poked with a stick to see how it's really going to hold up. And because this law is in the middle of COVID, and there's so many of us that do have, I would say, exceptional carryovers, because, like for SEK, we're not traveling, we're not using the cars. So
Right.
those are
That will
normally
catch up
budgeted.
with you eventually.
Oh yeah, it definitely will, and need to make sure that we don't feel flush with funds and make decisions that are not going to be sustainable. So, other questions? I hope this has been helpful. So and thank you for letting me sort of do a dry run of Roger's training, trying to make it my own. Any feedback that you want to give me, please do. I want to get better. I want to give you the information in ways that make sense to you. And it's useful to have the way Roger thought, and to be able to look at some of the training that he created and the samples that he created. But I want to address any points that maybe anybody's muddled on, and I will do more research. Nope. Okay, awesome. I think that you can either email me with questions or Erin will be sending out an evaluation, probably. Amy, I'm looking at you. We'll probably tell her to do that. So we can go ahead and
She
evaluate
should
this.
be.
Yeah, and because we did go through the spreadsheet, which I kind of wasn't, or the PowerPoint, which I wasn't expecting to do, this is going to count for CE. So if anybody was needing extra, and if you want to share it with your board, and if they have questions. And I'm glad that we came up with the idea of, yeah, having get-togethers to talk about budget and finance and, yeah, Zooming more. We'll just make a little budgeting community of practice. Hang out on Fridays, talk budgets. So, okay. And if anybody wants, for the new directors like me, I mean, this is going to be my first year doing the Iola budget and the SEK budget. If you're a new director and you want us to come and sit down and go through what you have now and try to parse it out and decide where did this money come from, where did they get this dollar amount from, we can do that, because sometimes we're here to support you, and maybe we can help find those answers together. We try to be helpful here at the Southeast Kansas Library System. Right? Okay. Thank you again for your time, and hope you have a wonderful holidays and get to take some time off and eat good food and lots of cookies. So, oh, I heard babies. Okay. Thank you, everybody. I'm going to stop the recording.